Alright folks, let's try this once more. You guys can see me and hear me. I appreciate you letting me know through Twitter. From my end, it looks like you should be able to see and hear my chart. You'll see my chart and hear me rather. Is the volume okay? Just wait for confirmation on audio. Everything's as loud as I can make it. Okay, thank you so much. So let's go back over to the chart here. I apologize, I'm not sure why OBS was not connecting me. It was giving me a bit of a fit this morning. Alright, so we have a old new week opening gap at that 4086.75, which is also the March 6th opening price, which would be bearish order block opening price. So that's what we're seeing hit here. So that's what these levels are. Dollar index has almost breached the 102 level on the downside, so we're watching that this morning. Very, very ugly morning so far. I pointed your attention to 40.79 1/4 this morning on Twitter for about a 5-handle run. And I mentioned 40.83, which is consequent encroachment of a discount wick on March 6th, 2023. And the other levels we have here in the chart. Admittedly, we have had a pretty impressive run since Tuesday. All one directional. And I'm not trying to pick the top in here. So we're going to be trading the intraday volatility with our tape reading today. Specifically reserving our attention to the 10 o'clock hour. So we're going to try to find our 5-handle run in that. And I apologize if I don't sound so eager to be here. I really don't want to be here. I have a migraine I've been dealing with since yesterday afternoon. I appreciate all your suggested remedies, but I've tried all that stuff. It just sometimes happens. Alright, so we are looking at a fair value gap here in the form of a buy side imbalance, sell side inefficiency. We traded down into that 905, hit the bearish order block on March 6th, the opening price. Look at your daily chart and you'll see that opening price. It's also an old new week opening gap low. I like to see it try to move up into that more. If we get above 40.89 1/4, I like 4104 as a continuation on the upside. If we reject any possible correction of any kind, 4104, I like that as an upside continuing. I'm not suggesting that's the case here yet, and I'm waiting more specifically for the 10 o'clock hour to begin. Giving up the first 30 minutes of trading in the opening range. looking at the lows in here should be correct. I think sell side at 72, 4072. All I'm doing is mapping out the morning right now. I'm not calling out a level that's going to absolutely be hit. I'm just giving you my internal dialogue. Upside above the new week opening gap high here. That's an old new week opening gap. That's not present week, by the way. And let's take a look at where we opened up. I'll give you the opening range gap. Okay, that's where we opened. Those that are asking how I do that annotation like that, that's just how I do it. And toggle the regular trading hours. Right down there. Closing price right there. You probably wonder what that is. This is an afternoon 5-handle run. Oh, look at that, he's hiding stuff. Alright, so opening range. Opening range gap low. Okay, so we have a lot of premium in here. So even if we went down 1/3 or 1/4 of the range, that would be something to be mindful of. So one of the things you want to do is you want to have your range like this defined. Pull your fib up, get 25%, 50%, 75% of the range. I'm not suggesting we're going to go all the way down there, but we'll see what we get in the 10 o'clock hour. Let's go back to electronic trading hours. So our range will be now on the chart. Okay, so you see opening range high, opening range low, keeps the chart really clean, and it allows us to take a look at what may be a consideration for repricing to close in that gap. Sell side resting below these relative equal lows. If it were to go for that today, the gap closure would be something to be mindful of too. And that's assuming a whole lot, folks. I'm not suggesting that's in the cards at all yet. Like I said, I'm submitting myself for the first half an hour of trading today, waiting for more information and being completely willing to miss the move. I have this this range here. I want to see if it becomes an inversion fair value gap. So in other words, it would be where it offered support here, traded up to new week opening gap low, and March 6th opening price, which is bearish order block. We had a nice reaction so far. So the levels we're watching now is the opening price that was this morning, which is right here on this candle. So we're watching if there's any sensitivity to keep price lower. So far there's no gap in this movement lower. And if we get below this fair value gap, will it act as resistance and breaker right in here. All one-sided since Tuesday Only small consolidation was in the evening hours last night, my local time, between 6 and 11, and then it started extrapolating to the upside. Apart from the levels I was mentioning yesterday, if you're experiencing some difficulty in reading price action or submitting to what's available in price action, this is a very difficult market. It's one of those markets where you have to know where it's going, higher time frame, and get into something that would otherwise be unconventional, and just hold it or sit on your hands. And it's very hard for a new trader or student or someone that's trying to make their ends meet. They have to do it with their live trading and such. It's hard to have that impulse quenched. It's hard to sit still, in other words. So you go in here and start looking for things. And it's becoming very difficult with all the things that's going on, all the bank stuff and geopolitical stuff, de-dollarizing, which somebody talked about last year on Twitter Spaces. So I'm looking at all of my other charts so to keep myself from getting disoriented, because I know every time I've messed around with this OBS and trying to toggle, sometimes I go back to a chart and I lose audio, and I don't have the patience today to have done something like that. So I'm going to stay on this chart and I'll just refer to things I'm seeing on my other monitors. Admittedly, if I were being honest entirely with you, I would tell you that I'd like to see the dollar index go a little bit lower and allow that new week opening gap high to be traded to 4089 and a quarter for ES. That's what I'd prefer to see. Not that it can't turn around and correct here. It's Thursday. We've had a one-sided range since Tuesday. I had to double check, make sure it was Thursday, by the way. My head's pounding me so bad. It's hard to focus. So if you take a look at your NASDAQ chart, pull that up and pull up a 1 minute chart and show essentially from 7 o'clock this morning to, well, I can do it here. Let me just do this. Okay, so here's this morning's trading so far on NASDAQ. It just keeps reaching higher, 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 and Dow. Okay, Dow's rather blunt-ended on its highs. And back to ES. You can see how we're much more jagged on the upper side, reaching for buy side on ES. And I'll talk through them one more time. Just you're paying attention to the way the highs are delivered here, respectively between the three averages. So ES, we've had multiple highs higher. I don't care about the higher lows. That's not what I'm referring to. I'm specifically taking your attention into how we have these higher highs. And then in the Dow, we don't see that. And in NASDAQ, similar to ES. So to me, because we're on Thursday, and this is like a note for your journal. Day of week characteristics, we've been one-sided, algorithmically delivered. It's all been straight up, hardly any pullbacks, if at all, just small little consolidations and going higher. So that's a very painful train to stand in front of if you try to short that. As my son found out, that's not fun to do that. And where they end up, where they stop, is a very hard read. So you have to demand a whole lot more from the marketplace to offer a, I don't want to say reversal pattern, because I don't want you to take what I'm saying here is a precursor to I'm calling the top. I'm not calling the top, but I'm anticipating, and I teach my students to anticipate the New York session on Thursday generally tends to create the opposite end of the range. So what we've been doing this entire week has been just powering higher, just keeps digging higher. It's gone to logical levels I've mentioned in my Monday analysis video on YouTube. I specifically aimed for the buy side. I did not have any sell side mentioned in the chart, even though I had discount arrays mentioned. I said this is the side of the marketplace I'm interested in going forward. So you've known since Monday evening that I've been looking for upside. I mentioned on Twitter how, and I've mentioned it other times in other lectures when I've gone on and ran about it, the observations I've made as a mentor teaching other people how to read price action and dealing with many different personalities. Hang on one second, just want to double check. Alright, so dollar has a little bit of a imbalance here at, let me tell you where it's at here. It's going to be on your 5-minute chart for Dixie. It's going to be 5-minute chart DXY on TradingView. And it's the Thursday 8:30 candle. You want to annotate that as a fair value gap. It's a SIBI, sell side imbalance, buy side inefficiency. So that has my interest right now. If the dollar can correct into that, that would allow for ES to try to reach some measure of sell side or a discount. So dollar higher today. I'm not suggesting it's there. I'm not saying it's an entry right now, but as we stay in this little narrow range like we're in right now, as we enter the 10 o'clock hour, that's something I would anticipate that. But right now we're just waiting. It's more or less just waiting for the time of day to line up with what would be better in terms of price delivery. But I was mentioning, over my years of doing this and teaching, I've had a lot of interesting personalities come my way. Some of them very pleasant to work with. I have a lot. Most of my students are just like that. But invariably, you're going to meet people that are just cut from a different cloth, and they're just very stubborn, argumentative, or contrarian by nature in every aspect. And I'm something of that. When I first started, I wanted to do my own thing, my own way, and everybody wants to do that. And I have a lot of respect for people that do that. But as I mentioned in discussions about, what it was like when I was coming up and learning how to read these charts like this, when I first learned, certain things that were repeating that weren't really in my books, I started to share them with my uncle, and I would tell him, look, let's just watch gold tomorrow. Let's watch soybeans tomorrow. Let's go in with these expectations. And he would go in there and trade it, but opposite. Like he would try to fade it. And we're trying to just tape read, okay, practice. I'm trying to convince him. And he goes out there and does the opposite with real money. And then has an attitude and starts to punish me, in our conversations, like I caused it to happen. When I said, this is where I think it's going to go, and you went the opposite. Why'd you do that? Well, it's because I want to be able to do this on my own. Then my oldest son, who I tried to talk into trading anything but crypto, he got into crypto, and he's lost over $20,000 doing the things I told him not to do. Okay, and I know there's some of you that are listening that are crypto traders, and you probably made money. Listen, I'm not a crypto guy. I'm not a crypto professional. I don't know anything about it except for I wouldn't want to trade it. So I've been pretty consistent with that. So he's in the red, 20,000 trading crypto against his dad's advice, but he wanted to do things contrarian. He wanted to do it his own way, you know. And there for a while he was making a little bit of money, but then all of a sudden, it went against him. And he's got all kinds of issues with the Coinbase drama that went on. So, long story short, my son, that is now involved in trying to learn how to do this, he is pursuing a model that he's carving out. So he's very reluctant to stay to the rules, and the conversation pretty much went like this: I need to do it on my own, Dad. I need to see it on my own. If you just tell me everything, I'm not learning like that. I want to just try it my own way, and if I fail, just let me fail. And I'm struggling with that as a dad because I feel like the dad that's walking behind him. And I know some of you are like, what does this got to do with anything? If you like that, just get up the road. Go buy somebody else because nothing's happening in the chart that I like. When it's there, I'll talk about it. But I feel like I'm that same dad that's behind him. And he's just learning how to walk. And I'm right there making sure he doesn't fall, bump his head, or hurt himself. But letting him feel like he can do it on his own. This is something different, though. This is my entire life. I know what I'm doing with this. I know how to teach it, and the stubbornness in him, which comes from me, admittedly, I'm not oblivious to that. But trying to do something just to confirm what I've told him would happen if he just didn't listen. For instance, we're looking for higher prices. He wants to short. He wants to do it. He has to do it. He has to push that button doing that. And it's very frustrating because I don't want to steer him into a argumentative relationship over charts like my uncle. It's very frustrating for me because I don't want him going through what is available to everybody else when they don't listen, which is temporary failure and setback. So when you're shorting something, when it's predominantly going to go higher, regardless of what you think you see in the chart, it gets right back to how these candlesticks are Rorschachs. They're ink blots. When you go to a psychiatrist, which I've never been, but when you go to them, standard practice in the past was they would show you these ink blots and they would ask the person, what do you see? And they would more or less manifest their own view about what it is that's in their head, really. And they forced that inside of the image of the ink blot. Well, these candlesticks many times operate like that, especially if you are emotionally stimulated to the point where you have something to prove, or you're desperate, or if you're a gambler. And unfortunately, that's what creates that learning curve that's much steeper for some people that come to either me or anyone else that teaches technical analysis. Whether their analysis concepts work or not, it's irrelevant. The concept is that most people have this ingrained characteristic. They want to do it opposite. And I don't understand how that, I understood for myself why it was like that. I didn't trust anything. I didn't trust anything at all in the books after a while. So then it made me a contrarian. So I don't take anybody's word about what they think causes price to go up and down. I just discount all of it and say that's all nonsense, which makes me abrasive to some people, and they don't like me because I'm very strong-willed in that regard. But my son's struggling with that in his early stages, and he wants to just now prove he can do it on his own too soon, like this is a video game. And I'm having a real hard time trying to be I don't know, the word escapes me, but I'm struggling with the dad in me versus the inner circle trader. because the inner circle chair is in me saying, all right, you so-and-so, you're going to get chopped up and you're going to feel it, and then you're going to feel stupid and you're going to complain to me about why you didn't listen to me. But I don't want him to go through that, because I know those things are major setbacks and they're barriers mentally, because then you start worrying about, am I going to do that in the future? When, if you follow the rules, the likelihood of that happening is less. So, and I've had students in my paid mentorship who paid me to teach them and proved daily, weekly, monthly, for years, I said where the market was going to go. And over 90%, I'm accurate. It's documented. There's no denying it. And I had people in there from every intake. Every time I opened up a mentorship in enrollment, some new group of people would come in, and invariably there'd be some in there that would be telling me they can't make it work. And come to find out, they're doing the opposite of what I said in the commentary, which makes no sense to me. I don't understand that. Like, I don't understand. Like, if you're paying someone, like for instance, are you going to go to Tiger Woods if he offered the opportunity to mentor you on how to play golf better, how to drive better, how to putt better? And as a reminder, folks, I know some of you don't like to hear these stories, but look at Price. Is it doing anything yet? No. So just relax. The idea of going to someone that knows how to do something, it's proven. You've seen me do this many times openly, calling things on Twitter, my group, my private older students. They've seen me for years outline the market in great detail and watched it pan out. So as a mentor, it's still a struggling point for me to understand why individuals, knowing full well that there is a track record of consistency and accuracy, and that same source tells you this is where you should focus on price. This is where the next draw on liquidity is going to be. And if it's above the marketplace, why do these individuals fight that and fade it and then complain that they can't do it? What are you complaining about? Why even complain? Like you're looking for some external responsibility for your own actions when it was you that did it. Like you're doing it. So it's almost like borderline insanity. That's what it feels like, from an observer's perspective on the outside. It borderlines insanity. You're doing something, expecting a different result from what statistically has been proven. There's consistency in what I'm suggesting is going to happen in the market, and it's very hard for me to wrestle with that now, because I've had now 2 sons exhibit that, and I've tried everything I can to avoid that, and they've seen me do this. They've watched me call it. They've watched me paint it out for them. Say, look, this is what's going to happen. And then something goofy happens with this boy. He gets in this pursuit of getting funded. And it's like, I'm going to do it my own way. And I'm like, you're making this harder than it needs to be. And I'm trying to be very patient. I'm trying to be very unlike myself. Let's put it that way. Because I'm not typically a patient person. I may seem patient, but I'm extremely impatient. So I try to do the best I can in terms of not drilling him like I would someone else. Like any of you, if you did this, I'd be blunt with you and just say, you're the problem. You need to fix it. You're not doing what you're being told to do. Out of all my kids, he's ready all the time. Ready for a competition, ready for an arm wrestling match. He's bigger than I am now and stronger, and he likes to show it to me. So it's just one more thing where I want to see him be better than me at this, and I believe he could be. But he has to allow himself to be taught, and I don't know what type of threshold he has to hit before that breaks in him and he just listens. And maybe that's the reason why he hasn't shown any interest up until now, because he knows that maybe subconsciously he would carry on like this. And when there's something at stake, now it's a prize, right? It's a prize, it's a trophy. If he can do this on his own, which, what's the chances of someone going against where I'm saying the market's going to go, and they haven't traded, they haven't had any experience, they have really no idea what they're doing, but they have the moxie to just go ahead and try it. And I try to explain to them, I said, even if you were to do it correctly a few times, or even get funded, doing it opposite to what I'm telling you, that doesn't indicate anything except for happenstance, coincidence. That's not skill. That's just, it just happened. And the chances of you consistently doing that, going against the things I'm teaching, it's not, you're not going to have a favorable outcome, let's just say it that way. So, maybe that's the reason why I have a migraine. I'm stressing over this boy. He's going to give me gray hair. Look for this level here. Expect it to go down to here. And then I'm calling the higher levels, and he's pointing to other things that's below the marketplace. And I'm like, why are you looking down there? He goes, well, there's a gap there, Dad. That's that thing that we're supposed to be looking for. Did you not listen to me? Did I explain this in a different language that you don't know? We're going up. We're reaching up. So why are you going to go short? Because there's relative equal lows down there. There's sell stops down there. Okay, but they're not going to have to be taught or reached into right now. It has unfinished business above us. So, I don't know. Just pray for me, because I'm having a hard time dealing with it. It's easy to deal with, basically strangers. I can just be harsh with you when it's necessary. When it's your flesh and blood, it's not so easy, because I want to make sure that I don't be hot-headed like I was with my oldest son, because I would really scold him and say, look, you got to do this, you got to do that. And I guess he was just like, well, I'm just going to go do crypto, and that way I'll show you. And that didn't work out well. I don't get it, man. I don't get it. All right, so we were able to almost reach up into that 4088, which is consequent encroachment of an old new week opening gap, which is what these levels are, okay? We're at 1 minute after 10. Dollar index is still just meandering around its low of the day. The Dow futures, let's take a look at that real quick. It's really slid lower, as you would expect, because it was the one that was failing to make that higher high or higher highs, when the NASDAQ was able to make the higher high. And ES, made its higher high. So we have SMT divergence after digging a little bit deeper into a premium new week opening gap. The opening range gap high, which is 930's opening price here. I'm not going to see, do we get below that? I'm not interested in chasing this higher, so that way you know. It can go higher, and I will miss that move. I will not engage that, I will not touch it, I will not look for it. And I'm okay with that. If it goes higher, if it goes to 4100, I don't care. I have rules I have to stick to, and if I'm wrong because I followed the rules and didn't take a trade and missed the move, to me, that's fine. It stings a little bit, my ego and my pride, but it doesn't hurt. It doesn't hurt you. Being wrong does not hurt you. Doing things wrong in a trade and abandoning the rules, that's painful. That hurts you, because it either undoes the positive things that you've built up in your model and you following that model, or it starts the beginning processes of bad habits. And bad habits are something you want to make sure you don't want to do those things. Feeling impulsive, feeling impatient, I gotta push the button. Whatever ICT says today, I'm going in there. I need to get my funded account passed, or gotta get my rent money. Today ain't one of those days, folks, just so you know. If you look at how price has been behaving, like it's a lot of whipsaw in here. Even though it's going to levels that we can anticipate, the clean, real low risk, just precise points of entry, they're not as obvious right now. And I know when I say things like that, right away you're thinking, oh, here it is. That's the sign that they're changing the algorithm. It's not happening. It's just we are in a very difficult time. There's been difficult times before. I've been in markets long enough to know that there's been times that are sloppy. You just can't expect to be as precise because the market's just being really crummy. We have a lot of things right now going on in the past few years and right now today. Potential WAR that's increasing, bank collapses, new monetary system restructuring, rollouts of central bank digital currencies, all of the other normal nonsense that goes on in politics. And everybody's at their wits' end. Everything's expensive. Everybody's wanting to cut somebody else's throat because they took their parking spot. Everything is intense right now. And add to it, now you're looking at these candlesticks and you're demanding they speak to you in kind whispers. All right, so far we're seeing what I'd like to see, which is moving down away from that opening price at 930, which frames the opening range gap high. If we had gapped or opened lower than where we settled yesterday, that would be the opening range gap low. Okay, so that's how I'm labeling that, so we can keep track of everything I'm saying. So we have a high, low, higher high. Yes, this high and this high, I'm looking past that because we went to this high ultimately. So if I went to a higher time frame chart, it would be referring to this high, that low, and that high. But because these highs here and here are inside the range of that high to that low, I'm looking at this structure here as the breaker. That's what I'm looking at, okay? So it's these two down closed candles that I'm referring to specifically. That would be my bearish breaker. We're below that gap. I told you I would want to see that happening. We're inside the 10 o'clock hour. It's 6 minutes after 10. Admittedly, I'd like to see it go below that low and leave a fair value gap here. Come back up. Overlap into this old fair value gap. That would be an inversion fair value gap. Inside of this bearish breaker, so it would be trading there after a potential shift in market structure lower. So we're watching this low right here, okay? Let me draw a little line on it. I always do that. I try to change the color of the line. I'm changing the color of the text. Alright, so we're watching to see if we go through 40.75 3/4. I don't want to see it come back up yet. I want to leave that extended with this candle like that, because then we offer what? A fair value gap to form right inside of this old fair value gap and inside the range. Let me draw that out too, because now I don't usually have all this stuff on my chart as a reminder that folks that are seeing my charts with all this lipstick on it. I'm only doing it so that way you can see conceptually what I'm internalizing in price. I'm not saying that you should have this on your chart forever, but while you're back testing and studying old moves, you kind of want to have that stuff on there. And over time, your eye won't need to see it because you'll just jump to it with just viewing the chart. Now see how animated this run is from here up here. So while yes, this parent price swing starts down here, I'm going to run a fib from this low up to the high, and that's going to be my dealing range. And the reason why I'm picking this low, okay, for the folks that are just eating potato chips and watching something else and at the same time you're listening to this, I'm choosing this low because it had a very energetic price run. So while yes, the parent price swing begins down here, if we're looking at the fractal that's being shown in this chart on my screen, I'm electing to use this one because it's much more energetic. It's much more pronounced. You can clearly see that one versus this rounded bottom type thing. I don't like that so much. We basically are in a range, and we left it, and then we energetically moved away. So I'm going to pull a fib just to get equilibrium. Okay, so equilibrium comes in right here. So right now we're still in a premium. What discount arrays exist inside this portion of price action? What down here is, in your mind, something that would be a reason for price to go down into? Well, you see these lows here, so that would be sell side here. That's sell side. Okay, and there's a small little fair value gap here with a short-term low at sell side. Okay, and then we have the sell side down here. So I just walked you through how to map out discount arrays when we're looking for the market to probe below. I'm watching this low down here, okay? It's pretty simple, isn't it? It's not a lot of acrobatics. Very simple, straightforward idea. Imbalances and liquidity. So we've tried many times here, 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 here to go higher, and it logically turned, broke below this area here, but below these relative equal lows, which is the reason why I said I want to see it trade below that one. Because some of you are thinking, well, why didn't you just trust it as a shift in market structure with this one here? You can. That's extremely aggressive. That would be very aggressive. I mean, if I were using that, I would have already went short here at that low of that fair value gap. But because I'm electing to go to this one here, I want to see just how we have it right now. See how we have this candle's high and that candle's low? It's already set up to allow for that fair value gap to be there when the next candle opens in 15 seconds. And then I want to see it trade down, leaving it there, and then come back up into it. And then we would expect a repricing down into this sell side here. And then we'll see if we can get into these other ones. I'm not suggesting or trying to be that, dogmatic about it. I'm looking at a 5-minute chart. I was thinking that was a 1-minute chart, and I didn't have a chance to toggle down. Well, there's the shift lower. We're going to drop down to a 1-minute chart. Yeah, we've already did it. I got this scoring and talking to you about everything else on a 5-minute chart. Thought I was looking at a 1-minute. Oh, fuddy-duddy ICT. Look what you did. Alright, so we had the fair value gap in here, which I would have been referring to. Unfortunately, I was looking at a 5-minute chart. That's what I was saying earlier. I didn't want to change and toggle stuff because I'm looking at all these time frames on my screens in front of me. And if I move things around or change stuff on this display as I'm talking to you live, I get disoriented. But you can see we went down where we're looking for. There's your fair value gap, and it also went up. And I mentioned if I was using these up here, I would have used that as an entry going short, and some of you probably jumped on that. But sell side's resting below here. Okay. Now notice also how we were on that 5-minute chart and I drew that fair value gap discount array over here. Look closer. You see how that right there is a refined imbalance where we can now change that and move it to here. Because that's where the 1-minute imbalance resides. That would also still be below this low. So it would be sell side below here and inefficiency there. Can you see that? Right there. So about to hit the sell side. Now you see that low here? See that right here? Now classic support and resistance teaches that this is support broken here. Come back and touch the bottom of that and it should act as resistance and go lower. Whenever I see a wick like that, I split that in half. And consequent encroachment would be the level that I would be expecting it to trade to. Sometimes these wicks are a little bit longer, more pronounced, which would require it to go up even further into and above an old low and still be able to go off with lower prices later on. I would like to see this SIBI here, all that one big candle between this candle's low and that candle's high. I don't want to see all of that close in. So even if it does reprice higher, I want to see that more or less remain partially, if not all of it, open. I'm willing to see it trade up into a little bit, but I don't want to see it entirely close in that. And I'm going to go back one candle so you can see the difference between where I'm anchoring. So that's this candle here and that candle here respectively is what I'm referring to. So we can trade into that up into here, but as much as half of that wick, which would be essentially 40.76 and a quarter. So if I'm watching price, say for instance, say I was able to get off on a short up here, I would allow for and be completely comfortable with it trading back up to 76 and a quarter, or as much as this 40.76 and 3/4. It's just a matter of, when you guys ask me, how do you trust it? How do you know when to hold on to it? It's going to keep moving and not reverse on you. Well, nobody really knows, because at any time the market can be manipulated and it can railroad whatever is going on in the marketplace at the time. So you don't want to be so married to the idea that you can't allow for the uncertainties of what can happen in marketplaces where manipulation comes in. Something comes into the marketplace, whether some geopolitical upheaval, some act of war, some act of God, something happens that no one would realistically expect to happen, and then the market does something entirely unexpected. So you have to have that in your mind all the time, which right now we're in black swan season, which means anything can happen. Anything can happen that's unexpected and cause all kinds of damage. And everybody's model, everybody's concepts won't work for a short period of time where it just goes recklessly, one way. All right, so looking for that sell side below 41.70 3/4, and then do we gravitate and spike through into that 40.69 level? Main takeaway is we were waiting for the 10 o'clock hour. This is that silver bullet that I was giving you in that Twitter space. Some of the newer folks are like, what did you say? Silver bullet? What's that? Silver bullet trade, ICT, is a setup that will form every single day. Every single day it will form. And what you're looking for is between 10 o'clock New York local time and 11 o'clock New York local time. There will be a displacement in a direction that you should be anticipating. Once that displacement occurs, you're waiting for a fair value gap. to form. When it does, you're going to be expecting that to be traded into and then repriced to a pool of liquidity that would be opposing your entry. For instance, what we're outlining here. We've already seen, a small minor delivery of it. I mean, it's been 5 handles or so since that run in here. But the expectation is for you to anticipate this formation in price every trading day. Every single trading day it will form, which is why I call it silver bullet. It's a move that will always be there. They will never be able to hide it from you. They're never going to be able to change it. Nothing's going to change it. It's always going to be there. There's never any reason for you to doubt that it won't exist. Okay, and it's also a way to train yourself patience, teaching yourself patience, sticking to a model and some rule-based ideas, and those being you're looking for 5 handles. That's it. As a new student, as someone that's just now starting to become interested in the marketplace, it's a little intimidating, isn't it? Who do you listen to? Who do you trust? What do you waste your time on in the beginning and regret later on? And you want to avoid that. You want to go to the people that have the best stuff. You're thinking that there's a system or a teacher out there that's going to teach you how to never lose. They don't exist. I'm not that guy. So there's a lot of things that go through your mind when you first get involved in all this stuff. So I try to be as responsible as I can and say things like, you're going to practice in a demo. You're not going to trade with live funds. You're going to decide if you ever decide to do that. I don't ever tell you to do that. But I promise that you're going to see things in price that are very consistent. They're rule-based, structured approaches for you to go in and study like a laboratory experiment. If I was to say to you, go out there and find some random fair value gap and pick a sell side or buy side liquidity pool, and good luck at it. Right away, 90% of you are going to be like, what am I supposed to do with that? This guy's not teaching me anything. Versus, okay, if I tell you, you hear my stomach? I'm starving. 2 days fasted. So if we are looking at a time window, very specific time window, 60 minutes, okay? Inside of 1 hour, you can find a 5-handle run that's reasonably easy, in my opinion. And of course, my opinion is biased because I've been doing it a lot longer than you. But out of all the things that I teach, I think that it's visually easy to see a fair value gap. It's easy to see that. But it may not be easy for you right now, but it's easier to see that than a breaker. It's easier, way easier to see it than determining what order block to trade off of. There's a graduation between one PD array and understanding it to the next, but you only need one. And if you remember, I set that 2022 model up with my daughter in mind. Like, I wanted to see her use that model, and I didn't want to see any excuse for her to say, well, I can't see it because the fair value gap jumps off. It's literally there in the chart, and even someone with a short span of attention, if I spent time with them, going through charts and showing it to them, they could see it, and they could go into the charts and find it in hindsight. But they don't have the experience to see it forming real time. And that's what these live sessions, and that's what the Twitter experience with me is helping with. It does not remove the necessity for you to be looking and studying, not just on those instances where I'm taking your attention to, but other old moves, and studying that and seeing it repeat over and over and over again. My stomach is talking. But the silver bullet is a time-specific setup that forms between 10 o'clock and 11 o'clock. And I know you're already going to ask, why does it only work in 10 and 11 o'clock? Well, that's the morning session silver bullet. There's an afternoon session that I'll teach you later on. We got all year, okay, all kinds of tricks to show you. But between 10 o'clock and 11 o'clock, what you're looking at is the last portion of the move that's going to unfold just for that AM session. And you're right in the heart of that move. And fair value gaps are generally forming after a move begins. There's an inception of a move that you missed. That's like selling short above old highs. You didn't get in it. You weren't able to do that, but you don't need that. Like I was teaching with the 2022 model, you don't need that to be able to do consistent setups. Between 10 o'clock and 11 o'clock, you are in the heart of the AM session move, which is essentially between 8:30 in the morning to 11 o'clock. It can go as far as noon, the beginning of New York lunch hour, but it's, again, a graduated thing in terms of time. There are macros that exist in price where between 9:50 and 10:10, in that 20-minute period, generally you're going to see a price run that begins within that 20-minute span. There's people out there trying to teach my stuff already in their little mentorships or their thing in Discords and such, Instagram. And they're already trying to say the move happens between 9:50 and 10:10. You're already doing it wrong, so stop trying to teach my stuff. The move begins in those 20 minutes. It's not the entirety of, I mean, obviously it can, I mean, a fast move or a fast market, it can do that. But what you're looking for is a run that begins between 9:50 and 10:10. That's the macro. It starts doing its run between those two time windows. There's another macro that exists at 10:50 and 11:10. There's two macros that start in those two hours. The silver bullet is specific to the 10 o'clock to 11 o'clock hour. And what we're looking for is an obvious pool of liquidity that has not been tapped into or engaged, which, you know, I've mentioned, obviously, you know, with the lines here, you see it. You're not demanding that you capture the daily range. You're not demanding that it goes to your technical target. You're only expecting it to give you your 5 handles. Big paradigm shift there, because a lot of you also are taking this idea and trying to make more of it than it really is. Will there be times when that move is a significant higher low of the day and it just keeps on running? Yes. But in the beginning, you don't know when those are going to be there. You don't know what that criteria is to cause that. That's a whole lot of other things that you have to learn progressively over time. So I'm reminding you as gently as I can to stick to the rules I'm telling you to stick to. And that way you won't be taken into these false expectations that it's going to do much more than it's designed to do. Case in point, fair value gap, I told you that we extend that forward. When it was bumping up on the bottom of that, here I was looking at the 5-minute chart. I thought it was a 1-minute chart because I was busy talking to you. I said I would go short there with the expectation to run lower. If you see that price there at 78 3/4, that's better than 5 handles. Did it take the sell side? No, but that's the structure that we used for draw and liquidity. Remember, I teach partials. I teach that you have to pay yourself. I teach you that it's just a way for you to frame your expectations on where the price should gravitate to. So go back up to a 5-minute chart real quick. So here's the low I was anticipating a draw to. Fair value gap here on the 5-minute chart as it went up into there. So as we hit that, if it were not seeing these relative equal lows here, if we didn't have the relative equal lows, if it was just one singular low, that would be an aggressive entry for me, and it would be where I told you. And it delivered immediately, as I said, attacking this short-term low. It offered more than 5 handles. That would be it. Now, compare and contrast, and I know some of you probably already in this trade, and you were probably holding on for this sell side, and this probably just ripped against you. Don't take the trades. You're learning how to read a tape. Everything I just explained to you has not been explained anywhere else about this type of setup between 10 o'clock and 11 o'clock. You didn't have that insight before you pushed the button. You had no idea what you're doing. You're impulsively trying to do something based on what I'm saying real time. instead of learning the lessons from watching and listening to what I'm expecting, what rules are there, what parameters are there. You can't learn doing what you're doing by pushing a button. You can't do that. You have to learn it and then go practice with it. Go look for it in old moves. That's the order of things. You don't learn how to do it by listening to me and trying to do it as I talk about it. That's not how you learn. So, anyway, the delivery of 5 handles, that's the easy, absolute, 100% guaranteed, time-specific setup that if you are a brand new person or someone that's coming to this channel for the first time, a setup that forms so consistently, so routinely, there's so many things that are inside this model, and it's a complete model. It's an entire model in and of itself. Think about what it's offering. You don't have a whole lot of time? Okay, no problem. You want to do this while you have your day job? Does your job permit you to have a lunch hour early in the day between 10 o'clock and 11 o'clock? Because if so, I would take my lunch then. That way you're not stealing time from your employer. You're being a good steward, and your time won't be divided, or your attention won't be divided during that time, because you'll be expected to do what you're being paid to do by your boss instead of watching candles form on your charts. If you are looking for a way to not spend so much time in front of the charts, which I can tell you is a good thing because it's fatiguing over time. I don't care how much money you make, it's still very fatiguing to do it. It will wear on your eyes, it will wear on your back, it will wear on your body and your stress. So you want to kind of keep it to an optimal level. And I can't find a way to be more optimal than a 1 hour trading workday. Between 10 o'clock and 11 o'clock, you absolutely know that this formation is going to be there. It's going to be there. Now, does that mean that you're going to have a winning trade every single day between 10 and 11 o'clock? Absolutely not. Absolutely not. It just means that you have an opportunity to have something that statistically is there all the time. And I don't want you to take my word at this. I want you to go back and look at every single trading day you can have data on and go through and see it's there. Now, what you need to practice is understanding, as I mapped out this morning, you don't need to be right about your levels. You just need to be right about, does it offer the range? Does it offer something better than 5 handles? Because if it can move better than 5 handles, chances are you probably will get 5 handles out of it. What do I mean by that? When we were looking at this fair value gap here, and it was bumping up and against it here, I said, okay, if we didn't have the relative equal lows here being specifically this low and that low, what was my apprehension? Because this could be a run lower, take the sell side out, and then rip higher and complete that new week opening gap high here. So it's not a singular low, it's relative equal lows. So there's going to be sell side below that. So they went down below it, yes, but I wanted to see this low taken out. That was one I would have been preferring, rather. But an aggressive entry would have been right here. Did it offer 5 handles? Sure. Did it get to the sell side? No. Does it mean rather the model's broken? No. You're operating inside these rules with the expectation that it's going to offer you 5 handles. You might not get it. It might be an instance where you're watching price and you expect it to do something like I would, what I was looking for, and it might not deliver it to you because your parameter, your entry, your limit order didn't get tagged in. You can't look at that as a reason to be upset. You can't be thinking, well, I wasted my time. How many 10 o'clock to 11 o'clocks in the future are going to be available to you? As long as you have breath, right? As long as you have your mental faculties and the markets are open, you have lots of those laboratory experiments to work with now. Will it take you 2 years to grow confident in using this as a model? I don't think so. But I think about 2 to 3 months is realistic because you want to see previous data to confirm what I'm suggesting to you is valid. Then, when you see all that, then you'll feel comfortable with investing the time of walking forward with it, tape reading it. And you do that for several months. That way, when you're bored of it, and you see it, you're not emotional about it, not nervous, not excited because it moved in your favor. You're just completely indifferent to the outcome. That means you're bored. That is the only time that if a trader thinks like that, then they can entertain the idea of maybe putting real money at work. But that's a decision that you determine that. And when is it going to be where you're bored? It's all completely objective from your perspective only. And it would be foolish of me or anyone else trying to be a mentor or a teacher to say you're ready when this and this. No. The only defining determination is you know that you're not emotionally stimulated by the outcome. You're not chasing a feel-good moment. You're not trying to replace a bad experience with a good win. And you're just following the rules. And that's a very hard thing for you to understand, especially if you're new, because you don't even have any rules. You don't have any experience. You haven't seen this form in previous data enough times to know that what I've said, it exists every day. Between 10 o'clock and 11 o'clock, identify liquidity, find a fair value gap. The fair value gap has to be opposing, in other words, opposite to the direction that you anticipate the liquidity to be drawn to. For instance, fair value gap after displacement lower, we wait for it to trade up into the fair value gap and then trade towards a pool of liquidity lower in the form of sell side. If you're bullish, you're looking for the market to trade higher, displacement higher, leave a fair value gap below market price, then trade down to the fair value gap, and then gravitate towards a pool of liquidity, which would be buy side that hasn't been engaged yet. And it has to have better than 5 handles in terms of the range from where you think it might get to. Not that it needs to get there. Remember, I'm teaching you how to look at price, removing the necessity of being right. Because right is not, it's not a destination. Being correct is not a destination. Excellence in execution is, and it has a very small population. The only way you get to be a member of that is by doing the things I'm telling you to do and avoid the things I'm telling you to avoid. But many times, even my own flesh and blood, they don't want to listen. And I don't understand. I don't understand it. It's like you all have to have that painful experience for you to, you're part of the club now. I want card carrying members that said, I didn't have to reset my account. I didn't have to do a refunding of account. I didn't have to go back to the drawing board dozens of times. I want to spare you that. I had to do that. You don't need to do that. And a lot of times it's because you hear me say certain words or talk a specific way or carry on the way I do. Some of you try to do that stuff. Like it's like you're a clone of me. And you definitely don't want to be a clone of me when I was my younger self, because I had no idea what I was doing. And the way I teach is to prevent it at my best ability. In my mind, I'm thinking I'm doing the best I can, but it frustrates me because I don't see majority of the people that I know are problematic, because when they start talking to me either in Twitter or they talk to me in my private mentorship, I already know by the questions they're asking or the things they comment on, their perspective is all messed up. And I know they're going to be the problem children in my community. Not that they're going to be trolling. Some have, and they've been removed. But I've also had people that are just problematic. They just don't want to listen no matter what I tell them. And I could sit here and tell you what's going to happen every single day, and they would be going against everything I'm doing. And then saying they don't understand why it doesn't work for them. What? Like, it makes no sense. It makes no sense, but yet it goes on all the time. Even in my free community. If you're honest, okay, and you're listening to me, if you have faded anything I've ever said, even though you've seen me call these things very accurately for a long time now, have you ever faded it and then looked back and had a bad experience doing that fading and think to yourself, why did I do that? Like, what was I thinking? Like, I want to know too, like, what were you thinking? I'm not trying to beat anybody up, and I don't want you to put, like a proverbial bullseye on you for being trolled. None of you should be trolled, but I know there's a lot of you that are just quietly doing it because you think that the market's moved too far. It can't be likely to go to that next level. It's already moved so much. Why can't they come back for the stops? Why can't they come back for the stops? Why can't they do this? Why can't they do that? Because you're thinking in terms of buying and selling pressure. You're thinking in terms of overbought, oversold. I don't think like that. I don't teach like that either. I teach the market's going to seek liquidity or inefficiency. And when a buy model begins, like we did on Tuesday, on the heels of me talking about me being specific about the buy side only on Monday's video, go back and watch a YouTube video, folks. Yes, right now at the time it was ambiguous. It could have been either way, but I said, like I always do, I always pick one side unless I say I don't know, and that's sometimes it's a fair assessment. Sometimes I don't know, and I tell you I have to wait for more information. But Monday in that video, at 1.5 minutes in, you'll see me go into a hourly chart, and I'm targeting the buy side. I said that's what I'm interested in going forward. I can't edit the video. It's already there. It's done. There's no sell side mentioned in any of the video. I mentioned discount arrays, but my focus was on higher. Now, did I think it was going to be a one-way train from Tuesday all the way up to where we've seen it trade today? No, I did not. Like, it's doing some wonky things this year, and it's been very, very difficult for me to go in and do what I'm used to doing, which is a lot of back and forth, big runs, easy, just look at this. It demands a whole lot more focus because it's a lot of back and forth whipsawing. I mean, look at what we've seen already here today. It's all over the place. And I mentioned this morning that it was like on Twitter. I said it's probably going to be a difficult session. Just lower your expectations. Now, you'll hear and see people after the stream ends. Here's what I did, but they didn't say anything beforehand. And I'm trying to be the voice of reason. Don't buy into that kind of stuff, because your results are going to be based on what you're seeing on that right edge of that chart. Where the candles haven't formed yet, that's where you're going to reside as a trader. You can't make money on the left side of that chart. It doesn't work like that. And right now, you're scared. You're intimidated by not knowing what the next candle is going to do. Is it going to rip your face off? Is it going to go and get you stopped out and then run in your favor without you being a part of it? That's all normal. Everybody thinks like that in the beginning. And if you feel like that when you start trading with live funds, you haven't traded in demo long enough, because you're now still keyed up about the results. You have to be right. And demo is there to determine the time window when you're no longer interested in being right. You're interested in following the rules. Whatever the outcome is, you're following the rules. The rules say this. The rules say that I take profits partially here, and then I move on my stop loss. I'm not trailing my stop loss. I never open my stop up larger. Once you put a stop on, it only reduces in risk. It never opens back up. Never, never, ever, ever. It's better for you to just collapse the trade. If you have the impulse and you're in a trade and you feel like you want to open the trade up with more risk because you trailed it too tightly, just close the trade, because you've already lost the plot. I promise you that will serve you better than the few times that you're going to get out and it runs in your favor. That won't happen most of the time. As soon as you start feeling like that, that's your subconscious telling you, you've been here before. You've been here before, but you want to be right. So now you're wrestling with being right and the experience that you remembered subconsciously, that this is exactly what you did the last time, and it stopped you out. But you now have committed yourself to this idea. It has to pan out. It has to. There's no other way for it to happen. Now what are you doing? You're imposing your will. And imposing your will with a market like this, it will break your arm off. But you can't arm wrestle and win it. You can't. But in the beginning, you think you can. And younger men, like I did when I was 20, I felt like I could do it all. And it was very, very hard to learn these lessons. In time, you'll learn how to anticipate these types of moves where it's choppy. You know when it's going to be difficult. What makes it difficult this morning, by the way? You're probably asking, how did I know to tweet that it was going to be a difficult session? What sets the tone for that? Well, the fact that we've climbed so far up, not for the basis of overbought, but because we traded two. We traded two, an old high, March 6th, okay? We went into the order block or the opening price of March 6th, daily candle. We have moved essentially parabolically from Tuesday, one direction, with no real retracements lower. And I know some of you are thinking, all this bad news is out there right now. It's got to collapse the market. It's got to create a crash. It's got to create a crash. I want to remind you all that when Venezuela was going through its, downturn and essentially collapse, its market was going up. It wasn't affected by that. Like, you might think that it would be a catalyst for a stock market crash. It doesn't work that way. They can take your money from you and the stock market will still go up. They can make things hyperinflated and the market will still go up. Why? Because it's not controlled by buying and selling pressure. Hello. Anyway, if I were not teaching, if I wasn't mentoring like I am this year, this is a day I would have stayed in bed, slept in, and not worried about it. And let me give you a little bit more details as to why I felt, because I don't feel like I've even satisfied myself about what that response was. So let's go over here to take all the lipstick off. Let's go to a daily chart. Okay. If you go to the video I put on Monday evening this week, I believe it was the 27th. I can't draw anything, because as soon as I draw it, it'll bring all the other stuff up. But just follow my cursor along. I'll leave it still for a second so you can track it. Okay, right there, that down close candle right here, I had that annotated on my chart on Monday evening. That is a fair value gap, sell side imbalance, buy side inefficiency. So the market has reached up into that. We traded into the opening price of it with this candle's high, and we traded into a new week opening gap. That is also, if you take, this is also for your notes too, so when there's new week opening gap tits, you take the old order flow areas, okay, before we even traded up here, you can see that this is a swing high. What you want to do is look inside that swing high. Where does the new week opening gap exist in that old order flow? Much like if you look at this old low down here, where does the new week opening gap that rests inside that order flow? Where's the new week opening gap in here? Is there one in this consolidation? And you're going to see how the market really accumulates algorithmically with that new week opening gap. You're going to struggle with all these different new week opening gaps in your charts in the beginning because you feel like you have to have all of them. You only have to have 5. You only have to have 5 of them, okay? But the secret to it is, and one of them, there's several of them that I'm going to teach you, but one of the easiest ones is when you look at old order flow, like this old area of consolidation and high back here, what new week opening gap runs through that? Because that's the fair value that it's going to trade back up into later on, in addition to the individual order blocks itself. See, these are the things that I always tuck in deep in the boring lectures, because I don't want to just give it to anybody. You're going to have to put some effort into it, listening, going through the motions like any other student with due diligence. This stuff's too good just to be tossing it around on Twitter, tossing it on a short or a 5-minute training to learn ICT in 5 minutes. You can't do what I do. Your students that are learning from you are learning from me. And when they don't do as well as they would be if they were under my hands, that's not my stuff failing. That's you failing to know everything that I know about my own concepts. Sorry if that hurts. But because we've had one-way delivery, we have done multiple premium arrays. Rejection block here, up close candle, closing price, we went through that. Consequent encroachment of the wick, we went through that. The old high, we went through that. Consequent encroachment of the SIBI here, went through that. All the way to the low of this candle, which is the low of the fair value, I'm sorry, no, it's the high of the fair value gap, but it's the low of the order block, which is the up close candle prior to this displacement. So that low, we've traded to that and through it. We traded up to the closing, I'm sorry, the opening price of that candle here. So the body of the order block, we've traded into that. And then inside of this range of this old high, we have what? A new week opening gap that runs right through it. And that's where we traded to. Now, what has the market really done? Nothing. Stop talking. Trade. Push a button. I'm pushing all the buttons so you understand what it is I'm teaching you. You want to read price without me? I want you all to be able to say, it's been fun. Second week in November ICT, but you know what? I don't need to come back to your YouTube channel. I don't want you to come back here and get me any ad revenue because you've learned how to do it and there's no need to come back here anymore. Okay? I'm not going to produce all kinds of content on a day-by-day basis, a weekly basis. I'm done. Okay? I'm done. And I want you to do well. And I want you to be comfortable and know all the things that have to be considered in these types of climates, these market conditions. What makes it hard? We've already traded up there, but I'm not trying to pick a top. My students know I do not try to pick tops in bull runs. I don't do it. I don't. And if you try to do that, you'll have your face ripped off. And that's not the system or the concepts failing. It's you trying to do something I told you not to do. But you'll have selective hearing, and you'll insist that it's my fault or my concept's fault when you're doing it wrong. My own flesh and blood are showing that human trait. It's mind-boggling to me. I don't understand it. I don't understand. I don't. So we swept the rejection block here. And this candle here, we went above that. We went above the opening range gap high, which is the 930 opening price. Now we're back inside this fair value gap. Now it's basically do or die because we're inside of the breaker. Here that would be a bearish breaker. So we have mean threshold of that, which could be inversion. And we have the old fair value gap here. We want to see how it respects that. Does it want to offer support, or does it go through it one more time and offer resistance? Let me take this off here. Take this off. Very, very, very difficult market conditions. I don't care who they are. I don't care what accolades they have behind their name. If any of the traders in the communities, whether it be ours or abroad, if they ever come out and say that these market conditions right now are easy, it's so easy, they're lying. Trust me, they're lying. Anybody with real experience has been doing this for a long time. They understand that this is really difficult price action. It doesn't stay like this, but there are going to be periods in the future when it frees up and starts moving around a little bit more. We'll enter another period where it's very difficult. And this is where the legends shine. The people that know what they're doing and how to navigate it, this is where they shine. The people that have just been doing it for a little while, had potluck wins here and there, chance wins, got lucky in the beginning. They have no idea what's going on. They're going to flounder. They're going to be reckless, overtrade, do foolish stuff. And people that are boring, okay? That's the key word, boring. They're just really consistent about what they're doing. They're not trying to be flash in the pan, success stories overnight. They're not trying to promote the get rich quick stuff. Generally, those types of people are going to be able to do well in these conditions because they know to dial back risk, dial back leverage, dial back frequency. That means do less. Less in this environment is more, because the chances of you doing something correctly, especially if you're new, it's probably slim to none. And then you compound that with, once you do it and you do it incorrectly and you hurt yourself, you want to try to hurt and get it back right away. Well, you might be able to get lucky doing that when it's a faster market that's trying to get somewhere that's obvious. But it's not that kind of market right now. It's a lot of whipsawing, consolidating, not making obvious runs. And it's not then changing anything. It's just, it's sloppy. It's just, the market comes in these phases where it's like it does this sometimes. And then all of a sudden, some kind of event will free it up and we'll be moving all around. And trading will become easier. If you have a losing trade, it's easy to mitigate that. It's easy to fix those. It is not easy to fix drawdown in these types of conditions. It's very, very difficult. And anyone that tells you otherwise is full of shit. I'm telling you, 30 years doing it, I'm telling you, there ain't no body out there that's going to tell you that this is a market right now that's easy. It's absolutely grinding people down. And you're new, and you're thinking you should have learned how to do this already last week. Not realistic. My best students know when it's like this to be careful, to be almost still, doing nothing, waiting. Market's going to gyrate, it's going to move all around. But it doesn't mean that you have to be a part of that. It just means that you have to exercise patience, self-control, because if you can't do those two things, the market will usher you out the door and you're leaving without your money. You're leaving your account balance in the marketplace and you're going home broke. And you see all these success stories, that are coming to you. And I have an interview I'm going to put up tonight. And I got 3 scheduled to do for next week, but they won't all be released next week, obviously. It's hard for me to find all the time to do all this stuff. My wife's asking me to do things, the kids are asking me to do things, and spring's coming up, and we have travels. So I'll be doing the RV playlist. You can see when I'm on the move and what I use when I'm on the move in the RV, how my system looks compared to all the screens you've seen when I'm home. But don't look at these success stories and think, I'm going to go out there and do that right now because I want to have an interview with ICT. I'm not that big of a deal. Okay. If you succeed, great. I want to talk to you. I want to let your story be seen and heard. But do not think, I'm getting motivated by this. And right now, think that the market is easy for you to go out there and do that. It's not. I promise you, sincerely, right now is very, very difficult. Even for me. Even for me. I'm used to seeing all kinds of moves up and down all day long. And I'm not seeing it. Maybe one relatively decent entry, and it's a lot of whipsawing, and it eventually goes to a level I would anticipate, but I wouldn't be willing to sit in. So if it's like that, when in doubt, stay out. It's a very simple rule. But in the beginning, and you'll probably nod to your head when I say this, in the beginning or when you're new, when you're doubting it, you think, oh, I got to go in there and just overcome my fear and just press the button. Well, play stupid games, win stupid prizes. And if you do that with your funded account or your live accounts, you found out that that's not the smartest thing in the world to be doing. You should have stuck to your conscience telling you, I really don't know what to expect, and I'm uncomfortable, but I don't have the wherewithal to just turn the charts off, which is what you should be doing on a day like this. Who cares where it goes when it does? You would have never been able to be nimble enough to get in if it does make a big move. So I teach with that perspective. I don't want you going into the marketplace thinking with a false sense of security that you can just go out there and slay everything in a market like this. I know my limitations as a mentor. I know it. I don't have a student guide, a lecture, a teaching approach that my students can reach to that makes these environments easy to trade. But what they do have is lots of lectures around jawboning and beating this into their head saying, this is where you don't want to be trading. Can you recognize that? I mean, for the folks that just started under my 2023 mentorship, okay? Can you see the difference? Can you feel the difference watching these candles paint like this? Versus when the market's really just liquidly moving up and down, it's gyrating, it's going to liquidity that's obvious to see, it's going to imbalances that's easy to see, it's elongated, it's stretched out, it's moving around, a lot of movement. You're not seeing that right now. You're seeing this. This is stagnant price action. You cannot look at this and think, oh yeah, this is exactly what I want to trade. You do that with this, you're losing your account. There's no easier way to give you a representation of what to avoid than seeing this. This is it. This is the stuff. This is the molasses swamp. Okay? Remember the children's game? I grew up playing a board game called Candyland. And I've used that expression when I'm talking about liquidity above relative equal highs and relative equal lows. Well, in that board game, there's a little area called molasses swamp, or at least the old version did. I don't know what they've made it up to be now, but it used to be molasses swamp. And if you ended up in that, you were stuck there. Well, this is what this is like. You're in quicksand. And the more you do to try to get out of struggling, sinking in quicksand, it makes it worse and you sink. That's your account going lower. So when you have conditions like this, books don't do enough, folks. I'm telling you, books don't do enough to teach this mindset. When you see things like this, there hasn't been a book out there that I've ever bought or even read, and I have over 2,000 of them. They never talk about these things because they're trying to promote an idea of you getting into something, not avoiding trading. The whole idea of selling the book, the course, the authorship of something, that they know how to get in a move that works, but they don't know how to avoid the moves that blow their account, that draw them down, that are struggling points. I've been around here long enough to know what that is. And I know how to communicate it. I know how to show it to my students, and the ones that have gotten it, they don't blow their accounts. They don't lose their funded accounts. They don't do those reckless things. They see this and they say, okay, you know what? It's a lovely day outside. Even if it's raining, I'm going to go do something else. But you don't have that when you're new. You feel like you got to be doing it. You got to push the button. You got to trade. I'm watching the dollar index. It's still ranging between 102.20 and 102.10. Just really not doing a whole lot. Now, let me make an argument for something here. In a day like this, I would favor the afternoon session. It might do something in here that's animated, and you'll say, but you didn't do that. That's wonderful. I don't care. You're welcome to have your opinion. When you're new, it's easy to see four-handle runs and think, well, that was a move right there. I thought it was going to go down there, and he didn't even talk about that. You didn't trade it. You didn't put a stop loss and manage the risk in it. You're talking about what you saw happening. I've been calling a move. I've been calling this. I've been calling that. In these environments, that's fine. You can call and paper trade and tape read all you want. That's the most of it. That's all you should be doing. You shouldn't be in here pushing a button on an environment like this, because the risk is undefined. Where are you gonna limit your risk? Where's the risk? Low and defined, where it makes sense. Where's the next draw in liquidity? I don't know. What did he just say? What's the calendar? I gotta write it down. ICT on live stream. This said he doesn't know right now. That's not the first time I've said that. I don't know where it's gonna go to next. So if I don't know where the next draw in liquidity is, how the hell do you think you're gonna know it? Well, that's arrogant. Well, if you're here trying to learn from me, how are you gonna know? If you're right, it was luck. If you're wrong, it's regret. Either way, it's something to be avoided. There's nothing to frame this in high probability that it's going to go higher or lower. I don't know if it's going to take out the 40.71 quarter. And 3/4 level down here where the sell side is. I'd like to see it. I'd like to see the dollar go up to the level I told you. If it goes down here, if it was to do that during the live stream, it would still be me saying that would be a trade that I wouldn't be in. But you would log it as experience. It can run up there and take out 40.90 and go to 41.04. I won't be in it. I'm not going to trade it. I won't participate in it because it's showing me every reason why I should not be touching it. And again, for the people that are new that don't know what that really means, is it's not respecting anything. It's just chopping around sideways. And I promise you, you go on YouTube, anybody that's live streaming and they're doing this market here, they're getting slopped up and chopped up. And probably cussing, ranting and raving, or killed their live stream, regretting they even went out here. And I told you this morning that we would have what? A tough session. Because the move was delivered before, and I told you where it was going. What was it, 8 handles, 9 handles, almost 10 handles this morning before the news even came out at 8:30. If the moves are going to be clean like that in the early session, and you reach targets like I've explained on the daily chart, we will have this. This is consolidation, potentially rolling into seek and destroy. Seek and destroy is a day where you will not make money. You'll go long, get stopped out. Okay, go short, get stopped out. Okay, I'm wrong. I know where I'm going now. Let's go long, and you get stopped out again. And then at that moment where you've lost too much because you used more leverage to try to get back your little paper cut losses, you're afraid to get into the next one. And that's the one that you don't enter, and it's parabolic, and it rips the face off of everyone else, but you weren't in on it. And it leaves you feeling demoralized. I've fallen victim to that a lot as a 20-year-old. And I know where they're forming now. And I teach, it's in the core content. It's right on my YouTube channel. It's all part of my language. But just because you watch that video doesn't mean you know how to do it right away. You have to be in a mentorship like this, where it can be explained beforehand. What are you expecting? What do you expect, ICT? What do you think the market's going to do? I've already taught you how to make money. I've already taught you how to be precise about your entries, how to find your targets. That's already on my YouTube channel. It's been up there. It's been up there. The reason why you failed is because you're pushing the button in environments like this. This is what's done you in, not my concepts. It's the market that isn't going to move for anyone, not even for me. So, am I foolish to say I have really strong technical tools and concepts? I'm the market maker beast out there. Look at me. I'm Mr. Everything. And I'm going to be able to do something in this. Hell no. It ain't doing anything. It's not doing anything but hurting people. So I know, because of 30 years having done this, I know where I hurt myself. And I don't need to walk down that road and have my arm ripped off by that pit bull that I know is sitting there waiting for me to pass by it again, that I've done it 95 other times. I need to go there on a 96th time to know that. And that's not my story. I picked that up from Larry Williams. It just works. That analogy works. It made sense to me. But how many times do you have to see a questionable market condition and you think, I see a fair value gap, I see relative equal lows? That's what my son's seen. And he arm wrestled it, and arm wrestled it, and arm wrestled it. Just let me do it, Dad. Just let me do it. Okay, it's your money, bub. And every time, blink, blink, order filled, order filled. Looks at me. I ain't saying as much as I want to say it, but I ain't saying I told you. But he has to feel that pain. He has to feel that pain. So I'm done trying to prevent it. I tried my best to help him avoid it. But we have been calling this thing on premium arrays. And if you fight that, you're literally playing Russian roulette with 5 bullets in 6 chambers. What's the odds of you succeeding and making it out alive? Slim to none. And unfortunately, the human body, the human mind, the psyche feels like they have to be able to do it themselves entirely. Like most of everybody that gets into trading. Oh yeah, I saw this guy, man. He's got this YouTube channel. He talks about these things that you can go in here and you buy. They're order blocks. Everybody knows about order blocks. Good grief. And you get out there and you rush. try to get funded accounts, open up live accounts, do the whole show, over leverage little account balances, and you discover you're trying to do something that you don't know how to do. And you rushed into a condition with real risk, and you weren't prepared. And then that toxic loser cycle begins. You don't realize it, but so many people have gone that route. And it's toxic. It makes you doubt everything. You become a troll. You ain't making any money, but you'll go online, pretend you are, and you talk about everybody else, but you can't do anything. And I've seen people go to the extreme and they check out of this world. That's how bad these things can hurt you. And I'm doing everything I can. Like, I don't know another way to talk about how to avoid these types of things. I mean, look at it. Look what it's done. I sat here with the entire, way beyond what I wanted to spend time with you. But I'm trying to hammer it down, let you know that we can see when it's going to be a good day. Okay, as a community, I'm guiding all of you. I know when the salad days are there, when it's going to be easy trading. I also know where it's going to be difficult, even for me. And when I say that, guess what that means? Don't open your live account. Don't. Just because I'm live streaming does not mean, okay, it's casino time, let's go. I trust ICT, he's always right. Look at him, he's always right. I'm right today. It's going to be an ugly day. A tough morning. I showed you the silver bullet trade. I was wrong with the sell side, but it still offered 5 handles. That's the rules. That's it. That's the thing that you're looking for as a trader, but you don't want to accept it because you want 50 handles, 100 handles, 20R, 50R trades, or that ain't success. Let me tell you something. 5 handles a day, I don't care how you are in the money. That's good money. That's good money. If you can consistently do that every single day and be content with it and just stop, who says you have to trade more? Who says you ever have to do anything beyond that? If that's all you ever arrive at, under my tutelage, if that's all you could get to, that's not failure. You're doing way better than 99.999% of everybody else because they have no idea what they're looking for. They're reacting to price. They're waiting on some kind of indicator to tell them it's doing something. When we know when the trade's going to form, ask the people that use indicators, what time is that indicator going to give you a buy or sell signal? And laugh because they're not going to be able to tell you. They're never going to be able to tell you that. But we have a specific element of time that's advantageous to us. We know what we're looking for. And that should be encouraging. It should really encourage you. When's the indicator going to give you your buy or sell? I wasted years trying to crack that. And there's nothing in that. So I reverted back to what? Open, high, low, and close. What time do these things occur? And I went through all kinds of markets, all kinds of data. I spent so much money on every aspect of data, studying, looking at old moves. Most of you would never do that because you want to do the next move. I ain't got time for that, ICT. Ain't nobody got time for that, ICT. We got to be getting funded. We got cars to rent, villas to rent, and say we live there on social media. I'd like to see it get up there in that 40, 89 and a quarter level. But I might be asking too much of it today. So think about this. Imagine if I was to say on social media, like on Twitter, this morning and say, look, man, all right, boys, it's going to be easy today. Get ready. Back the truck up. We're going to rob the banks today. And then it did this. You might not make fun of me like some people try to do foolishly, but you'd be doubting me. Like he said, it's going to be a real easy day. Look at it. It just was like crummy. If he knew there's an algorithm, then he should have expected it to be like this. Now, contrary to that idea, this morning I said that we're going to have a very tough morning. Lower your expectations. Now, my long-term students know exactly what that means. Chop, slop. When you want the salad days where you want to get in there and bebop. Easy runs, easy targets, easy this, fast money, easy, easy, easy. That's coming. But it ain't happening yet. And you have to submit the time. See, you're taking your impulsiveness about needing to make more money to keep up with the social media people you're trying to keep up with. And that's the wrong way of doing it. You're taking that impulsiveness that you have to feel like you've arrived. You got to find significance on your social media equity curve. And the only way you can do that is by what? Making money. Finding trades. And you're finding out that it's very difficult right now. And guess what? I'm the type of guy to tell you it's hard for everybody. And when we can anticipate these things being difficult, it's not a guess. These things repeat. These rules are there for you to anticipate when it's going to be hard. And those are the times when you don't risk a lot or don't trade at all. Or, in this case, what we do is we anticipate the morning's going to be sloppy. Let it go and do whatever it's going to do. Who cares? I promise you, you probably know 5 people online that are kicking themselves because they went in today. I promise you, if they're being honest, you know at least 5 people. And you probably are following people that are complaining right now. Oh man, this market sucks. I got chopped up. I got beat up. And here we are in good hands. This is the stuff that should be in books, but isn't. This is the stuff that should be in mentorships, but isn't outside of mine. You can't make money long term if you blow it all on days like this. Everybody blows their account on a one-day event. One day, something happens in that one day that completely derails you. Either all the equity's blown in that one day, or it starts that chain of reactions over and over and over again. Now you're caught up in a loser cycle. But predominantly, it's a day like this that you think, okay, it's going to go up. No, it's going to go down. Okay, it's going to go up. It's going to go down. You're not going to use a stop. You're going to over leverage. You're going to trade bigger than the last one because you only need a small little move to get back what you just lost on. And that small little move becomes a death by 1,000 paper cuts. Yes. Yes, it will happen to you. And I'm doing everything I can to teach you how to avoid that. And some of you just want that war scar, like it's a badge of honor. That brotherhood is something I wish I wasn't a part of. I wish I could have avoided it. I wish I could have had someone like me talking to you like this, showing you in a chart, real time, before it happens, it's going to be hard, it's going to be struggle. It is what it is. Because I wouldn't have blown as many accounts as I did when I was a young man. I would have not had all the adversities and fear of never being able to do it, suffering from the losses, stress trying to earn it all back to get another account funded. That's stuff that's easily avoided. Like, you have all the advantages now. You, this generation, you have all the advantages, but you don't see it like that because you're spoiled. Everything happens real quick on a smartphone. So therefore you think everybody owes you something immediately and you should have never have any hardship. And you think everything's going to be easy for you. Well, welcome to the reality. Some days in the marketplace, it's impossible for you to make money. And that's a chapter that's going to be in my book. The days that you cannot make money in. Nobody else wants to write it. I'm going to do it. That's the secret. That's the thing that keeps people in this business long enough to let their even ridiculous ideas hopefully pan out if they are good fund managers. If they are good money managers, flipping a quarter can be profitable. But how do they hurt themselves? How will you hurt yourself? You're going to push hard in this type of climate right here. You're going to push real, real hard. But it's going to finally move. Really? How do you know that? because I don't. And somebody may think, well, because you don't know doesn't mean I don't know, or somebody else doesn't know. If they know how to trade this environment right here, and they're profitable, and he had not drawn down significantly, I will be their student. Go find them. They're not out there. They're getting chopped up. They're going to show you something after the fact. They're not going to be able to tell you that this is going to act like this and behave like this. I really like that fair value gap on the dollar index I mentioned earlier. I see dollar going up there, and then that sell side at 71, 75 on ES. I see both of those things happening. That's my gun to my head idea going into the afternoon. Will it happen this morning before lunch begins at noon? I don't know. And because I don't know, I'm not interested. How's that for logic? How liberating is that? I don't know, so therefore I'm going to go take time away from charts and spend it with my wife. I'm going to go have lunch with my wife. How's that feel? It feels wonderful for me because I don't feel like I have to be chained to this charts like you do as a new trader, new student. You think, oh, he's going to leave and the big move's going to happen. There might be a big move after I leave. Guess what? I don't care because I know how to find the easy days. I know when to anticipate the easy days, and I know how to trade those easy days. You're going to see it. You've already seen lots of it already. But you can't learn properly, at least for me, without me taking you into these environments like this. And it sucks because you want to see big runs and entry called and targets hitting and just easy, fast runs. Well, I can't materialize that. If the markets are going to be held in this, it's going to be held in this. You can't force it, and I can't force it. And it's a hard wrestling match in the beginning because you feel like you just got to stay in front of the charts. No, you don't. I'm telling you, you got permission. Turn them off. There's far better days out there in your career. This one day, you're trying to make something happen in this. And I do so much discussions in my Twitter spaces, and I go off the rails because I'm animated because I remember how frustrated it was for me. Trying to force something in this environment when it does things like this. Where none of my PD arrays are being respected. None of them. How do I know it's not a good day trade? Because none of my PD arrays are performing like I want them to. So how many does it take for me to lose faith in an idea? 3 of them. If 3 of them fail, I'm not interested. It's happening consistently all day today. So what makes you think that I should be thinking, oh, well, now it's really going to run? You see that? There's logic behind that. That's not ambiguous. It's very specific. It's a measurable thing that you can see when you look at your charts. Is it continuously giving you feedback that the order flow is bullish? Or is it bearish? If it's not giving you continuous, ongoing feedback that you are on side with your expectations, that means it's not performing like you want it to. Stay out. I promise you, if you just listen to me, you will not hurt yourself. You won't. You'll be able to stay in the game long enough when we have these easy days, and they are coming, folks. You just got to give it time. The market will not stay like this. It'll unravel. Boom. Big moves will be coming. Fast market moves. Large ranges that are sustained. That's coming. But if you beat yourself up in these conditions like this, you're going to be afraid to engage when it's like that. When you're supposed to be engaging, you'll be fearful because you beat yourself up like this. And your subconscious has retained all these bad experiences, and now you're afraid. Now you have scar tissue that doesn't have elasticity. You got to stay limber. Why am I doubting it? Is there a word, limber? I'm doubting if that even exists. If it isn't, I just coined it. There you go. You got to stay nimble and flexible. And you have to be willing to cut bait on days like this. Cut bait means you're done. You're not even going to pursue anything. You're not looking to. If you have a trade, you get out of it, regardless of wherever it is. You just let go of it. And then come back another day. Tomorrow it might be better. This afternoon it might be better. And that's how I treat this. When it's like this, I say, okay, I have a divided day. So the AM session blows. No problem. I'm done. I'll come back at 15 minutes to 2, New York local time, and I'll study and look at the price. If it doesn't show me anything that I like by 2:30, I'm not spending the rest of the day and not even the last hour. That's the procedure I follow. How hard is that? It's pretty simple, isn't it? It helps me manage my day. It helps me manage my time. And if you're going to be a trader, it helps you manage your business. You don't want to be, just because there's market hours open, you don't want to be sitting here plunking yourself down in front of the charts, because the longer you sit in front of them, the more convinced that you see these ink blots as a Rorschach that tells you to get in. And you regret it all the time. I promise you, if you've blown accounts before, it's been like this. You've done it to yourself in these environments. So, I know it's probably not a sexy live stream. It's probably not one of those feel-good moment days where like, wow, man, this is freaking awesome. It's great. But this is the stuff I wanted to learn. I'm telling you, I would have paid money to sit with someone, explain these types of conditions and how to avoid them and when to anticipate them, because I couldn't see them coming. I just fell victim to them all the time. And when you lose money and you lose money and you lose money and you're obsessively compulsive, one of two things are going to happen. You're going to check out permanently, and that ain't in me to do that. Or you're going to dig your heels in and say, damn it, I will crack this shit and I'm going to figure it out. And that's what my life was. That's how you're hearing me now. All the bad things made me who I am. All that rough stuff that beat me up, ground me down, I learned from that to become where I am right now. And everybody that makes money with the stuff that I've taught, they're benefactors to the things that I had to endure. And that's why I get pissed off when people try to teach it and don't give me credit, because you motherfuckers don't deserve it. Period. So hopefully tomorrow when we do our next live stream, I'll be with you again at 9:15, and we'll try to do the exercise again at between 10 o'clock and 11 o'clock, so that way we can see, does in fact the silver bullet exist on a Friday? We have some news again tomorrow, so that might move around a little bit as well. But your homework assignment for today is to study and see if we move outside of this range. We got to get below, significantly below this low and below this fair value gap, or above the high of the new week opening gap. Okay? If we were to expand above the new week opening gap, I'm looking for 4104. Okay, so 4104. If we get above the new week opening gap, that doesn't mean just trading above it and therefore it's going there. It needs to trade above it, treat it as support, and then run higher. If it does that, I would expect 4104 as a draw on liquidity for the PM session. If we break below the fair value gap here, then I think that we're going to gravitate down to the sell side over here, not just here. That's my expectation. And if I don't see things that would support that idea before 2:30 New York local time, I'm not doing anything in the last hour trading. So that's what I'm doing. That's what I'm expecting. That's how I see it. Gun to my head. Now you know what I'm thinking. I'm not touching it right here. Okay? So hopefully you got something out of this. Hopefully it inspired you to trust yourself and give yourself a little bit more time, knowing that these days can be predicted and not fall victim to them. You saw the silver bullet idea pan out. It was better than 5 handles, and it didn't have to be correct about where I thought it was going to go to the sell side. Sell side, as I taught many times before, they are points of reference where the market can gravitate to. It's not, it has to go there. It can go there later on in the day. That's when you're right, okay? But you don't need to be right in your trade. You need to be profitable, and you need to be able to get out when it gives you 5 handles. It's easy, folks, but everybody else is trying to say it's complicated. It's not complicated. It's very simple rule-based ideas. But you have to be diligent. You have to have the rules written out, understood, known, and stick to them. Then, if you stick to them, it isn't hard. It isn't complicated. But when you deviate outside of them and go against what I'm suggesting as a bias, then obviously it is hard. Then it is complicated. But I'm not complicated it when you go against what I'm suggesting the market's likely to do. So until I talk to you tomorrow, enjoy the rest of your day and be safe.